source for the latest insights and analysis on the energy commodities market. Led by two industry veterans, Bill Shanahan and Brian Pieri, as they host their weekly commodity market recap. With over 55 years of combined experience in the energy sector, Bill and Brian bring a wealth of knowledge and expertise to the table. From trading and hedging to finance and optimization, they have seen it all and are here to break down the latest market trends and share their insights. So sit back, relax, and get ready to dive into the world of energy commodities with Bill and Brian on EnergyRogue.com.
Hello, everybody. Did you hear that?
We're what?
A wealth of information. Can you believe that?
A wealth of information.
That's what that guy said. Yeah, whoever that guy is, he's that guy, you know.
He's that guy. All right.
We are who we choose to be.
Here we are.
So listen, folks, thanks so much. Thanks for coming out. We're going to try to keep this to 30 minutes, but Bill keeps telling me that I talk a lot. So
Everybody, help him out. Just listen faster.
It took me so long to do so many important things.
I know.
So
it's
listen,
hard.
folks, today we're going to talk about something that is going to change for 2025. In 2024 and 2023, there was a thesis around the natural gas markets in the United States. So today we are going to talk about natural gas, and this is going to be about framing up the larger scale perspective of natural gas. And well, let me ask Bill, are you ready? Unlock natural gas profits. Are you ready?
Are we going to have to pick the lock, or do we have a key?
This is my gift.
That means you have a key.
Yeah, exactly. So the natural gas market is filled with a lot of opportunities, and there is a lot of volatility in there. We are not financial advisors, so anything that we discuss here, you can read all the disclaimers below if you either need extra sleep or if you really like reading disclaimers. I don't know who does, but
disclaimers to me are the cure for insomnia. I tell you what, you can line them up and you'll be asleep in no time.
Yes. So what we're going to talk about today is the TCF gap. Okay, production versus demand. It sounds simple when we put two variables in place, but I just got off another call that was very eye-opening when we're looking at production versus demand or supply versus demand. If we go back to basic economics, if supply increases and demand stays the same, what happens to prices, Bill?
Supply increases, demand does not. You will always lower the price.
Yes. And now if demand increases and supply stays the same, what happens?
You will most likely increase your price of your commodity, provided there's not been any efficiency gains.
Right. So when you look at this matrix, you can do one of two things. Either ignore the data, what the data is telling you. As Bill likes to quip, we take data to information and information to strategy. So we're going to condense a little bit of data today so that we can develop some thought processes on some strategies that you could utilize to understand not where natural gas markets are, but where they're going. What did Gretzky like saying? You love hockey references, don't you?
That's right. So you always skate to where the puck's going to be, not where it's at.
Yeah. And that's what we try to target. So when we look at production versus demand, let's go backwards in time. The perspective in backwards from time was we had 2-week winter demand periods for natural gas in last winter and the winter before that. So there was discussion, have we just extinguished a lot of winter demand, and it's not so much the same anymore. What has actually happened? This winter has shown no, winter was just suffering from the El Nino and has transitioned to a La Nina. And that is actually something that our weather expert, Brendan, if you're listening, hey, good to see you, has modeled and forecasted, and he's been communicating this to our membership since October. Look out, this winter is going to be slow to start, but then it's going to be strong, and it may actually last a little bit longer, but we're not going to get ahead of ourselves there. So
That's right.
the perspective last year was we had 2 weak winters. We had a production surge. From 2021, we went from 90 BCF to 104 BCF a day. That's 3 years, 4 years? 4 years now.
Yeah, that's a huge jump.
That is a huge jump. And if you go back a little bit further, 2018, we were at 75 BCF a day. Can you believe that? We've gone from 75 BCF a day to over 100 BCF a day. But 2023 and 2024 kept adding production. And then what happened during 2024, we had flat production. Okay. So 2023, we saw a growth of 5 BCF a day, but 2024 was actually flat on production.
So I think, Brian, what's interesting about that, when you go back to those numbers, is that we had a growth in demand in 2024, 2023 and 2024 of the LNG exports of around 10 BCF on average over those 2 years.
Well, and here's where the data is coming from right here. So you can take a look at this from 2021 right here. What do you see here? You see 90 right here, all the way up to 105. And then many were expecting 2024, because this is the beginning of 2024. Many were expecting us to be to 110. I don't know if you remember seeing those projections, but I do.
Yeah.
Right. And we inside of Energy Rogue were saying, no, we're going to be flat. We're going to likely decline. And that's actually what we did. We did decline for most of the year, but had a nice recovery towards the end. So that's
almost in the fourth quarter, when everybody's trying to determine what their share price is going to be. Strange.
Yeah. So when we look at the flat growth in 2024, and we look at this chart right here, I mean, this is really telling us what's in store will be more of the same. And bear in mind, around here, we had about a $2, Bill loves when I draw, about a $2 price, right? And then we actually jumped to a $4 price. So what's interesting is production increased, but so did the price. Now, some of that is natural for winter, but when you look at the weak demand, production surge, 2024, a lot of people just expected, well, we're just going to have so much supply and we don't need a lot, right? Because previous 2 winters were not long, they weren't cold, and they actually showed that we didn't need as much storage, right?
Right. So what are the financial guys always say? Past performance doesn't necessarily future performance.
That's correct. That is correct. So so now, what does that mean? This is actually the title of our live stream today. TCF, 1 TCF. What is a TCF, Bill?
That's trillion cubic feet. I mean, when you start talking about a trillion cubic feet, it's sort of like talking about our, debt in the US. We start talking in trillions. That is a lot of gas.
The mind is the only weapon that doesn't need a holster.
Okay, if the mind doesn't need a holster, what's the skull. It seems like that's a whole
Yeah, right, it's a cradle. It's a cradle for mine. I like to. I like.
So just to put this in perspective, folks, total storage is basically 4 TCF.
Right.
So 25% of storage just disappeared.
So here's what we're actually talking about and this is part of the reason. Let me clean this up a little bit. And in short order, what you can see here is that last March, we had a very wide gap between the 5-year average, which we're not gonna dive into the average versus what it should be measuring, because that's a completely different topic. But when you look at this delta, we were over 750 BCF over the 5-year average. And if you look at what has happened over time, this has been shrinking. And this is something our membership, we've been talking about every single week this year. And if you go back and listen to our streams, you'll actually see a very similar sentiment. Don't get too comfortable. That gap is closing, and it has to do with demand. Okay, has to do with supply did not grow and demand grew. So we are projected. We're currently right on top of within 20 BCF of the 5-year average. But we are currently projecting for the next 2 to 3 weeks that we're going to exit March by, I put 250, but I think it's going to be over 300 BCF. So that means that we actually 300 BCF under the 5-year average. So that means since last March, year over year, we're 1 TCF tighter on an annual basis. That means from a supply demand perspective, 25% of our storage was extinguished over the last 12 months.
So why is that important, Brian?
It's important because it gets us back to the headspace or the projection of where do we go from here. A lot of people are stunned and shocked that we have, yes, past performance is not,
Oh, and remember, next Friday is Hawaiian Shirt Day.
There we go.
All right.
That is what it is.
You got to love Hawaiian Shirt Day.
So the reason that's important, 25% of our storage surplus went away. We had a surplus, and that surplus was a combination of 3 main events: 2 winters and Freeport being down for 6 months, which actually arguably added 300 BCF of the 750. So that means our demand has soaked up most of that
And so what has changed? In 2023, our average LNG exports were around 12, right, for the year?
Let's actually look at it. Fortunately, there's this really cool tool. It's called Rogue Edge, and inside of Rogue Edge, you can ask a question like that. Look at this. Isn't this pretty cool? What'd you say, 2022?
2023.
2020. Well, I'll do 22 through 23. All right. So 2022 was around, we topped out around 13, but this is where Freeport was, which took us down to 11. So the end of 2022 took us to 11. And then you had 2023, we actually stair-stepped up, and we stair-stepped up to 14, but we also had outages here. That was actually more outages. And then we put those back online. Then we
And then we had
some market demand issues.
Right.
as
That's
well
where Europe
as-
thought they had their storage full. They're sort
Yep.
of regretting that right now.
So we went from 11 to 14, but look what has happened at this last little bit. We've gone up to 16. And when you look at the capacity of what we have coming, you're looking at another 3 to 5 BCF. Now, 11 to 16 doesn't sound like a lot. However, let's contrast this. 2023, which was our biggest year of production growth ever, we grew by 5 BCF. And we're about to add 3 to 5 BCF of demand inside of this year.
More coming.
More coming. So demand is higher. It was higher in 2024. Supply was flat in 2024. Early outlook for 2025, flat on production, possibly even down, and growing demand, at least 3 to 5 BCF in the equation, right? So demand is going to be the key. If you stay ahead or fall behind. So analyze the trends, identify the opportunities, and avoid the pitfalls. What are we saying here? Demand is driving the market narrative right now. Without a firm grip on those trends, you're missing significant opportunities or encountering costly setbacks. Don't be caught off guard.
So, Brian, does this make you an optimist for natural gas? Optimist being prices going higher?
We are going to be higher for longer.
You know, I'm an optimist too. You know how much an optimist I am?
How much?
I know how to display how much an optimist I am.
Oh, you do?
That's how much an optimist I am. This could be the year.
Holy shnikes, it worked.
Yeah.
If you don't know, Brian and I are both very depressed Astros fans most of the time.
Yeah. Well, big fan. Was disappointed with the cheating scandal, but a lot of teams do it, but it doesn't excuse the fact they did cheat. And so, anyhow,
So
this could be the year.
If you're an Astros fan, if you can remember the '86 season.
Oh, heartbreak. Billy Doran. A lot of people only remember Biggio as the second baseman. Billy Doran was a great second baseman. Billy, if you're listening, big fan here. So,
I know a lot about sharks.
Yeah, exactly.
So, demand is going to be key. Staying ahead or falling behind is going to be key. So that is actually one of the reasons that we actually invented Energy Rogue and launched it in 2021. We're going to talk to you a little bit about Energy Rogue, but really about what these trends are. And if you want to learn about how to approach the markets, there is an Energy Trader Toolkit. Check the link below or the pinned comment, and you'll be able to follow the link and sign up for that. And it is an energy trading toolkit that is going to give you all the important factors of what to look at for natural gas, what to look at for crude oil, not so you can see today, but so that you can see into tomorrow. Because Bill and I live this all the time. We live this every single day to where we study these trends. We know these trends.
You know, I've always wondered about you guys.
Yeah, exactly.
So let's actually look at something that is really flying under the radar. A lot of people don't know about it because there is so much discussion around renewables. But when I look at this trend, what do you see on this trend, Bill?
Highs are higher and the lows are higher. This right here is the natural gas demand for electrical burn. And I have so many thoughts about this, but we're going to keep it to the fact that we're burning more natural gas to make electricity. That is the bottom line.
Well, and there's a lot of debate around this because AI and data centers have consumed so much power in the last 2 years, and that's unexpected growth. There is actually, and I want you to look at the scale. Okay. We just showed earlier that in 2023, our largest growth period ever on a year was plus 5 BCF on the supply side, right?
Right.
1 year. So what did we just talk about? 2024 production was going to be flat, right? So we have the production side. Now let's look at the demand side. Demand side, well, this is showing that in the summer, we went from 40 BCF a day to year over year 40, call that 44, call that 42, or not, 47, I'm sorry, and call this close to 49. We are actually growing at a rate of electricity. Let me actually clear this up. So if our production is flat, right? If we're looking at flat production and our electric goes up +2, and that's probably kind. We already talked about LNG, right?
Right.
Let's be conservative and say that's only +3.
Right. It's already +2 right now.
It's already +2.
Yeah.
+3, we actually have an additional 3 to 5 BCF. So we are already at 5, which means our supply side needs to have record production to keep up. Now there's questions, will renewables make a bigger dent? I've seen articles about solar. I've seen articles that this solar season is going to be one of the strongest demand pulls on solar than ever. So I'm curious about
Yeah,
that.
but so let me tell you this. The other
Yeah.
thing I read is we're heading into a solar, what do they call it? A solar de minimis. In other words, the sun's not going to put out as much as it used to because it's a cycle every
Right.
12 years.
Yeah.
So while we
Yeah.
may have more panels, we may not have more sun.
Wait, every 12 years, does that have impact to winters?
Yes.
Hmm.
Yeah. There's a lot of this
Hmm.
this stuff is almost like science.
Your feeble skills are no match for the power of the dark side.
Yeah, I know my skills may not, but let me
I'm gonna
do
make
this.
you an offer that you can't refuse.
All right, folks. Hopefully you don't get annoyed. We like having fun. So here's what we've covered so far. Production in 2024 was flat. We had flat growth on the production side, and we grew on the power demand side, and we grew on the LNG side. And add in that year over year, we extinguished a TCF of storage inventory. Okay. That means on a supply demand basis, over a TCF in a 1 year time frame, which is 25% of our storage capacity. So demand is going to be the key to watch this year because power is going to be super important, especially as we get into the summertime. LNG is going to be important, and these are going to be the trends that you should stay on track for.
Right.
And driving these trends, there's going to be 3 paths to kind of understand the market. One is data overload. You spend 30 plus hours a week analyzing the market data weekly. You listen to this live cast and you think, I'm gonna go look for the information over here, over here, over here. And others take a wait and see, rely on people to communicate what is actually happening. We do that every single week, but we are only touching a very small sliver of what is actually happening in the industry.
Right.
Lastly, this is a path of least resistance. You could subscribe to something like Rogue Radar, where we put are supply, demand, storage into convenient red light, green light statistics for crude oil and natural gas, along with a what did you time a 4-minute read?
It's about a 4-minute read.
It's about a 4-minute read. This is going to tell you everything that you need to know.
If you're not reading it aloud,
For
it's 5
example,
minutes if you read it aloud.
well, and for example, looking at storage, since we're talking about storage today, last week we had 2.1 TCF. This has a forward outlook for the next couple weeks. Plus, you can look at the 5-year average and what last year, and it doesn't take long to notice we're below the 5-year average and we're below last year. So that is why we have a green light right here. So then we take a look at weather, production, Canadian imports, all of these, so that you don't have to spend 30 hours a week or hope that you hear the right thing at the right time to actually capitalize on these market trends. So Rogue Radar is something that we have out there it gives you a red light, green light system, daily support and resistance levels, video insights twice a week. You actually get access to a limited portion of an interactive dashboard. Plus, it's easy to use. It's very easy to use. It's cost effective. It is $89 a month. And for those that want to lever into the data analytics and really take full advantage of everything inside of here, I mean, this data goes back a long way. You can analyze these trends and see this has been happening for some time. Power demand has been growing, and now we are stair-stepping up. Now, I'm gonna throw it on its head for a second. Look at the scale, 40 BCF a day. There is a projection that we are going to go times 2. So think about that for a second.
We literally do not have anything in the energy matrix right now that could handle a times 2 in a very short period of time.
So, but power demand is growing faster than renewables. And what do we show here? That we are producing 105. So if just the power sector increased by, let's be modest, only 20 BCF. Let's see, that only takes us, how long does that take us? That takes us, the last time we were that low, that takes us back to
right there.
2018. So
only 6 years.
Only 6 years. So it took 6 years. 6 years.
6 years of drill, baby, drill.
To grow by 25 BCF, right? That took 6 years.
And 400 rigs.
And close to 600, I think. But now, look at this. Power is only one part of the equation.
Right.
So you can see that we have industrial demand down here. That's this blue section right here. We have power demand, which is that red. And then we have residential commercial, which is going to be high in the winter, low in the summertime. And you can see that there's a natural offset to electricity and residential commercial. But this purple slice, this is the one that keeps growing. Okay, it doesn't seem like it right here, but I'm going to show you something. Mexico exports, that's also been growing at a much slower pace. And then what is this last one? Pipe and distribution, that's roughly going to be flat. But I want you to look at this. What do you see in this? This is continuing to show the same trend of higher in the winter, right?
And
higher in higher lows. So demand is going to be the key. So getting back to it, data overloads. You can spend 30 plus hours a week trying to track all this down. You could wait and see and just hope that somebody tells you the right thing at the right time to capitalize on it. Or you could sign up to Rogue Radar. It's $89 a month, 4-minute quick read, and that gets you access to 30 plus hours a week of research so that you can just look at a quick video, read it, and you can actually determine your path. Rogue Radar and Rogue Edge, this gives you your competitive arsenal. Rogue Radar is packed in a 5-minute read plus 2 videos once a week. Rogue Edge is packed with 150 interactive downloadable charts alongside our recently released AI energy strategist. So every week you can actually ask our AI, give me a good natural gas trading strategy for the week. And you can submit, and I'll let the large language model read through that. Our Discord community, which is phenomenal. As a matter of fact, I will say that we load this up, and when we got multiple things that we talk about every single day. And look at this. This was yesterday in the morning, a bear tipping this off. Well, guess what happened? The market tipped off down. So we talk about the market every single day, plus not trading advice. I offer my opinion every week. And these two trade ideas that I had for myself, both of these were filled within a day and a half.
So, folks, if you go ahead and subscribe to all the way to Rogue Edge, you know what can happen.
Reach a goal undreamed of by science.
So this is actually what our AI is actually recommending. And with that system, watch for a break above 439 for bullish momentum. And then that is actually what it was looking for at the beginning of the week. And now we have fallen back away from that. And that's why the Discord community is there to help you. It's like having a teammate on your team. Stop wasting time. You can stay ahead, gain an edge, confident decisions. And if you're ready, just go to energyrogue.com and you can see which plan is right for you. Rogue Radar gives you a PDF with a couple of videos. Rogue Edge is going to unlock all of those features. Plus, you can ask us questions about, do you think I should trade long or short? I'm going to give you my opinion, not financial advisors, but we will give you the opinion. So don't let the market pass you by. The choice is yours. Right, Bill?
Don't let the market pass you by. It sounds like a country western song, man.
I think it is one.
If not, it should be.
Are you trying to start a fight? No, I'm simply stating.
Yeah, I might be starting to fight. I might actually write that song. Don't let the market pass you by.
Best quote in any movie ever is Blues Brothers, where they walk into a bar and they say, well, what kind of music do you play? And, oh, well, we got both kinds, country and Western.
That's right. That's right.
So listen, really, this is designed to help you understand and realize that we had a TCF. Let's go back to this one. Let's go back to the chart because this shows, pictures always show a little bit better than explaining. But when we clean this up and take a look, the delta, the distance that we had, and again, I want to drive this home. Last March was 750 over the 5-year average. We now have a projection for under 300 to the 5-year average. So that means we have extinguished a TCF of our storage in the difference between our supply and demand on an annual basis.
Yes, I have thoughts about that, but we're not going to go that far.
You have thoughts about that?
Yeah, I think we keep looking at this 5-year average, and that drives me nuts because we see demand increasing every year. So that means every year we're going to need more storage to handle the volatility of demand and supply. But we're not creating anymore, and so now we're starting to see how that's going to affect us. The more volatility, the more storage we need, mainly because it just can't get to the market fast enough. And I think we'll see it in the season this year when we're at 1 TCF or less in storage.
Yes. Yeah. And I know we have some people that are watching on X. Paul, if you happen to be listening to this, I love your stuff. You have been talking about this for some time. We are over 2 BCF tighter than people are actually absorbing and seeing. So, Paul, if you're listening, hey, I would love to connect with you sometime. So, so these are the offerings that we have. So you can seize the advantage, and we're really here to provide everything for you so that you can make those decisions for yourself, because it is really important to really study and evaluate and not be surprised by the market. And when you're looking at your investment strategy, your trading strategy, or your hedging strategy, we have a lot of people watching that are hedging their purchases of natural gas and crude oil, as well as their sales of natural gas and crude oil. So
Right.
it's definitely,
It's not sorcery, it's science.
Exactly.
that seems to
And
be
remember, folks,
What is the primary goal?
The goal should be to buy wins.
and there's that
The
other
goal,
one.
of course, is to be like you.
So listen, we appreciate you being here. We would love to see you in our service. You don't have to, but what we know that it takes 30 plus hours a week of research to really come to these decisions and actually be able to articulate these decisions. And David, if you're listening, it was great talking to you this morning, and absorb these. And it takes so much time and projection. And I'll leave you with this one. This is probably the single chart that makes $179 a month for Rogue Edge seem nominal. This tells us our net production change, and the fact is we are still in base decline. When
Right.
we look at the Permian, when we look at Haynesville, Eagleford, Bakken, we are decreasing storage. All right, we have less storage, we have less production, and we have more demand. So in all the simplistic economics books that I have used in the past, tells me prices are going to go up. So that's I think that's what we got today. So a TCF off of last year. What do you think,
Or
Bill?
basically a TCF is basically 1.5 LNG plants.
Oh, there we go, Joe. Good to see you. Hope the drive is going well. Win, win, win. Let's win, win, win. So so listen, if we can help, reach out to us. If you got any value from this, just drop us a like. Yeah, drop us a comment if you can. We would love to hear from you because we love hearing from everybody. So, I don't know why we love hearing from everybody. It's just,
That's because really,
we're two dudes setting out with a common goal.
But seriously, thanks for taking your time, because we know your time is valuable, and I hope that this gave you a little bit of perspective on what's ahead, because what is ahead of us is going to be a very interesting year, and I think natural gas is going to be higher for longer. What is the preview for next week? What are we going to talk about next week, Bill? What is the big idea?
next week we might talk a little bit about nuclear war.
Whoa. So if you're not subscribed, subscribe so you can talk about that. That is a biggie. So I think that's all we got. Appreciate your time. And Bill, any parting words?
No, everybody just enjoy your week. Listen, be smart about what you do out there in the market. You know, you can't just guess and don't go with what we call headline fundamentals. You know, the papers are not financial advice either. Sometimes they're not even good advice. And so we want you to succeed. We want you to be a success and want you to succeed individually as a company. So any way we can do to help you do that is what our goal is. So, hey, listen, we'll see you next week. Looking forward to it. Reach out, subscribe, both to YouTube and subscribe to Rogue Edge. I promise you that'll be money well spent.
Yep. So thanks so much, folks. Hope you have a great day. We'll see you next week.